Very quick video. I wanted to respond to somebody that actually came up with a really good question. And this is super important for people buying insurance, why you should or shouldn't change the liability limits. The question I'm going to read here is from user CQ2. There's a whole bunch of weird numbers. I recently changed auto insurance from State Farm to Progressive. I went from $50,000 per person if you injure someone and $100,000 per accident. So if there's multiple people, to $30,000 per person, $60,000 per accident liability. So they're lowering their liability limits. This isn't in Texas. We're in our 60s and don't drive much. Can you give us some advice? So yes, user CQ to whatever. I actually have a lot of really good points on this. There are some good and some bads. So the biggest thing you've got to think about is some of the videos, if you haven't seen them, you'll see me talk about the profiles. So are you a fit for company A or company B? In this case, it looks like you were a better fit for Progressive over State Farm. And I get it. State Farm's actually probably going to have a pretty large rate increase if they haven't already. I'll link the video that goes over that at the end. What they've done is it's almost a trick. So some agents don't even know about it. So you can't really prove that they did it on purpose or not. Here's what we learned in when I first started in the industry, how to get people to buy regardless. The first thing we did is kind of be a little bit tricky, as we would say, what do you want? And you don't know because we're not supposed to advise you in call center type environments, which is kind of sounds like what you're looking at. And you say, I just want the cheapest thing I got. Great. Do you want state minimums? And you say yes, not knowing what you're asking for. So what you've done is you've essentially took your liability limits, which wasn't huge. It's $50,000 per person and $100,000 per accident, and you've lowered them a level. You've gone down to the state minimums for Texas. Now it's $30,000 per person and $60,000 per accident. Let's say you were paying $100 here and now it's gone down to $60. Sounds great. Like, I'm okay. I'll take a little bit of risk. If I hurt someone, $60,000 is enough for a total and $30,000 per person. That should be good. If not, then they can go after me and whatever the case. So that's fine, right? Let's just pretend that that's not an issue in this factor. When that policy renews in 6 or 12 months, depending how long that policy you bought was, it's going to level back off. So what I mean by that is you've essentially gotten a discount to drop the coverage. It's less risk. It's all about risk in insurance. The more risky you are, the more you pay. The higher risk you live in the zones, the more you pay. The more accidents in that company around you, the more you pay. The worse of a driver. You get it, right? There's risks. And you've lowered the risk intentionally. So what that's done is that's given you a discount, but it's a temporary discount because guess what happens when that policy renews? This is no longer a lower risk. This is now where you're at. You're now a state minimum holder, and who do you want to do business with? Do you want to go into a casino with your buddy who has $60 in his pocket, or do you want to go to the casino with your buddy who has $5,000 in their pocket? They can hold the bets against the casino. They can lose the money and still move forward. They can't. So the risk of getting sued is way, way higher, and it's more complicated. Right? The insurance companies have their way out. Don't get me wrong. I'm not saying they're just out to help you every 2 steps, right? They're going to fight you and they're going to fight the lawyers and they're going to say, no, this isn't our problem. They bought it. That's their issue. They signed that dotted line. They signed that disclosure. That's on them. And that is on you. That's what you're supposed to learn with insurance. I'm sorry. I'm making it sound like you're a horrible person. You're not. This is common, actually. This is a good thing for us to teach people. So what happens is, so the price is here, the $100, and you've gone down to $60, and the risk has changed. So now the bar has moved. When you renew your policy, there's a good chance that that 60 goes back to 80 or even 100 because that risk hasn't disappeared again. It's come back. You've almost essentially temporarily delayed the payment that you're going to have going forward. The other question I would ask you is, in Texas, you have the option of removing the uninsured motorist. You can also remove the personal injury protection and the med pay. You can pick which one you want. So did you do that as well? If that's the case, there was no savings. If you took what you had and removed it, there really is very little that you've done. Now, have you made a bad choice? I never like state minimum, so I kind of half say yes. But let's look at it from your standard. You're 60. You've got 3 years and you're retired. And in all honesty, most of the time in almost every state that I've researched, you can't lose your retirement in a lawsuit. You'll have to check with a lawyer because I am not an expert, edutainment, whatever you want to read the disclosure in the description below. By the way, if you're looking to do an insurance quote, I'll put a link below there. I work with some people in Texas and several other states that are very powerful that don't look to cut the coverages. They're looking to protect you correctly. So in your scenario, it's not as risky because of your age. Your insurance is going to go up no matter what as you get closer to 75. You're not even near there, so you've got some time where you're going to have these decent rates. But if you had an accident, let's just play devil's advocate, and you damage that person's vehicle or injure them, in my guess, if they dropped you down to 30 per person, 60 per accident, they probably knocked your property damage down to 30 as well. It's very common. I see that all the time, where imagine you hitting a used BMW, or you hit a nice SUV, or even honestly, any new vehicle out there right now is worth more than $30,000, even 50. Let's just say you had 50,000 for property damage. It doesn't matter. You're on the hook for that extra coverage. Now that's cheap enough to you can change that. You can go in and have them raise that property damage. And if that is the case, I would at least do 100,000 at minimum. The other part that you got to think about is, okay, so if I do injure somebody and they get hurt, and let's just say it's a big accident, it's a $50,000 or even $100,000 medical bill. Guess who's on the hook? You are. If you have or own your house, which most people in their 60s, I hope so. I haven't researched that either. But if you're in your 60s, I'm assuming you have equity in your house. You have some sort of income that's coming in because you haven't retired yet, I'm assuming, or you own a business or whatever the case is. These are assets that you have that become liabilities because they're now something that a lawyer can go after. Even if the person gets injured, let's just say $10,000 over what you carry, they're not likely going to just say, give me a credit card and we'll take your $10,000. More than likely, there's a reason that you drive by these signs and these billboards, because there's all of these lawyers, these injury lawyers that say, let's go after the big money. And that's, in all honesty, what a lot of people do when they start getting online and researching, hey, this guy hit me and didn't have enough insurance. What can I do? You need to contact, and I will tell you, you need to contact an injury lawyer. And what that injury lawyer is going to do is go after you for more than just the $10,000. There's pain and suffering. There's potential future medical issues. There's the cost of their insurance going up because Texas is one of those states that counts not at fault accidents against you. So there's a ton of stuff that you're going to be liable for. And you've got to question whether your income and your assets are worth going after. If you don't have more than $30,000 worth of assets and you're working part-time at the gas station, you personally don't have to worry about it. Consciously, should you a little bit? Maybe the concern for future people. Yeah, but I mean, it's the risk you get to take. A lot of people take the minimums. Don't feel bad that you did. Just know what your options are. So is that worth the price savings that you had? Now, I made up the example of $100 down to $60. So in this case, is $40 a month to $480, almost $500 a year worth of savings, worth taking the risk of one claim costing you $80,000, even $5,000, whatever the case is. It could just be that they'll let you pay the cash out and they'll walk away and everybody's happy. But in that scenario, you've got to look that over. What I personally would do is I would take the two declarations pages, your old one and your new one, and I would set them side by side and look at them. See if there's anything that changed besides the liability limits. See if anything came off. You may quickly realize that some of those savings weren't really savings. It's just less risk that you removed. You could have done that with your State Farm policy. If the case was that they were cheaper, then don't worry too much about it. You have the option of raising them. Insurance is open-ended, so you can make changes to your current policy at any point. Your Progressive policy actually is a better deal, then just go back to them and change the coverage. Let me know what other questions I can answer for you if you have further questions. I'm happy to help out. This was a really good question. I appreciate it because a lot of people don't realize how some of the pricing plays a factor. Things that we don't think about, and I usually don't think about half the time, is insurance score, location. So maybe you moved and you're now shopping again. That could be why the price was less, because the location was better. Maybe you got a better insurance score, or your credit, as most people call it. Your credit or insurance got better. Maybe you could have reran it with that current company because it got better, and now it's actually a better price. But if I'm shopping it, I will never know that because it's not something that's openly shown. Each company doesn't track and say, oh, well, you had a better deal over here. They don't have a way to look that up. Only you can know that based on your profile. If you're looking for advice on insurance, like I said, leave a comment below. There's a description below if you want to do a quote, but more so, if you want to learn more now and learn about just the coverages that we just talked about, the liability, the bodily injury, the property damage, all of those things, I'm going to put a video here that goes over Car Insurance 101. If you're just looking for discounts and you like the company you're with, you're just trying to save some money, then check out my discount video here that's going to go more in depth. I hope this was helpful. Let me know what your guys' thoughts are. I'm Mark with Think Insurance. I'll see you in the next one.